Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, March 4th. There wasn't any shortage of news on Tuesday. The problem for the stock market is that most of it seemed to skew to the negative side of things. First and foremost, investors were rattled by accusations from the head of Dubai International Group that Citigroup will need a lot more capital from outside investors than it has already received. Citigroup's stock dropped as much as 8% in the wake of the accusation and weighed heavily on the financial sector, along with the investment banks, which again saw another round of estimate cuts. Separately, a warning from Intel that it was revising its first quarter gross margin rate guidance downward due to lower than expected NAND flash memory pricing also cast a pall on the broader market in the early going. Selling activity intensified, though, after Fed Chairman Bernanke told the Independent Community Bankers of America that defaults and foreclosures in the housing market were likely to continue to increase. To help stem preventable foreclosures, the Fed Chairman suggested banks consider writing down the principal amount on mortgage loans as a means of restoring equity for borrowers. Bernanke's suggestion didn't help the financial sector as participants viewed it as a reminder that further write-downs look to be in store for the sector. Comments from a bevy of other Fed officials Tuesday, including Fed Vice Chairman Cohn, didn't do anything to lift the market's mood either. The major indices went on to set new lows for the session around 2 o'clock Eastern Time. For the Dow, NASDAQ, and S&P, that translated to losses of 226, 37, and 24 points respectively. As one can tell from the final standings, those losses were pared considerably in late afternoon trading. Strikingly, a sell-off in commodity prices that resulted in a 1.9% decline in the CRB index did not act as the primary catalyst for the recovery. That honor, in our estimation, goes to Cisco, whose CEO said in a presentation that he's even more comfortable with the company's long-term guidance than he was following the last earnings conference call. Furthermore, he indicated that he believed the U.S. downturn would be short and shallow. The comments from Cisco CEO John Chambers sparked a broad-based bargain-hunting rally in the technology sector that favored a number of beaten-up companies like Intel, Amazon.com, Microsoft, and Apple. Separately, Apple told investors that it is not planning to start a dividend or to buy back stock right now, and that it expects to hit its 10 million iPhone sales target in 2008. Notably, the financial sector participated in the late recovery effort, also on some bargain hunting activity that kicked in after the sector came within a hair of revisiting its January low earlier in the session. In addition, the umpteenth report that an AmBank financial bailout deal was near aided in the sector's recovery try. The financial sector, down as much as 3.3% earlier in the day, closed with a decline of 0.8%. I'm Pat O'Hare for Briefing.com. Thanks for listening and have a good evening.